Hello everyone, welcome to Indian Economy by Aman Soni. In today's news hour, we'll be discussing the important articles related to economy from the Hindu newspaper. In page 1, there is a news about GST collections. In February, the GST revenues crossed the 1.3 lakh crore limit. This was the fifth time that the GST revenues had crossed the 1.3 lakh crore collections. And compared to the pre-pandemic levels, this was almost 26 times higher than the previous times. And these collections were higher because of the GSTs imposed on the importing goods. For example, on the goods that were imported, the GST collections increased by almost 38%. On the imported services, the GST collections were increased by 12%. So even though the GST collections are higher and it is increasing, we can see the major increase is because of the GST on imported goods and services. Which shows that the domestic economy has to pick up and it has to improve the production, and the impact of the pandemic has not been over, and the increase in the GST collection doesn't show that there is a direct increase in the domestic manufacturing and consumption of service, but the major portion is because of the GST on imported goods and services. Today in editorial page there is no news related to economy. We can skip to the business page. In the previous news hours, we have already discussed about the impact of chip shortage, the positives, negatives, and the impact it has on the domestic automobile industries and the telecommunication industries. So you can skip this news, you need not go to the details. Again here, you can just read the headlines. During the election rallies, the demand for petrol increases. So the consumption of petrol would increase and the sales of petrol and diesel would increase. That's very obvious. So you don't need to go into the details of the article again. Because of the conflict in Russia and Ukraine, there is a scope for improvement in the IT sector in India. Now we have an opportunity where in Ukraine, it is a mainly IT and R&D services related economy. Because of the conflict there, now the companies would want to shift the jobs to some safer location, and various surveys are expecting that almost 70% of these jobs would be shifted to India. So it is an opportunity for Indian IT sector to get the jobs that are moving from Ukraine. And various industries like service providing industries like the banking, retail, automobiles, and the healthcare industry would be benefited because of this conflict. Ukraine war will lift the import bill and widen the current account deficit. We have been discussing that because of the increase in the prices of the oils, the crude oil, there will be increase in the inflation in the Indian economy. Because the input cost of the crude oil would increase, the cost of production of goods would increase because the input costs are higher, and the cost of the final products would also be higher. So the retail customer would have to shell out more in the future. And the other impact of this increased oil prices is the government has to pay more because of the increased prices. Paying more means there would be increase in the current account deficit, and also the subsidy bill of the government would increase. When the government is giving subsidies for the LPG connections, if the prices of the LPG increases, the government have to compensate the difference amount, the increased difference amount to the oil companies. That way the subsidy bill of the government would increase. That means the expenditure of the government again increases here. These are the repercussions of the oil crisis. And it would also have an impact on the value of rupee. Whenever there is a conflict or the crisis like natural disasters, floods, droughts, the investors would want to move out of the country. And the foreign portfolio investors, if they try to move out of the country, they would start selling the shares and bonds that they are holding in the Indian stock market, because of which the increase for US dollar will be high, because they are selling the bonds which they are holding in Indian rupees. They want to convert it back to the US dollars and move out of the country, because of which the value of the Indian rupee against the US dollar will fall. This will also lead to a fluctuation in the value of the rupee. So we can see the direct impact on the domestic industries at three different levels. One is at the inflation front, other is at the current account deficit front, and the other is at the exchange rate of rupee value. So various experts feel that even a $5 increase on per barrel of crude would lead to almost an increase of $6.6 billion in the current account deficit of India, because majority of our oil consumption is based on the imports. And even a 10% increase in the petroleum product prices would lead to an increase of 42 basis points in the retail inflation. So you can see how much the oil prices have a direct impact on the domestic economy and the retail prices. Investments through the P notes drop. We will discuss the concept of P notes in the separate video. You can skip the news related to individual companies. Yesterday we have discussed that the Russian banks were few of the Russian banks were removed out of the Swift messaging platform, and the value of the Russian currency has fallen against the dollar to the low. Now the portfolio investors from Russia are trying to exit. So the Russian government is putting restrictions on the investors so that they cannot exit immediately, and the further fall of the Russian currency would be maintained. In the text and context, there is a article about the oil MNCs in Russia and the impact it would have on the global economy. Let's go through the article. Russia is a major producer of natural gas and crude oil, because in the Siberian region of Russia, it has vast reserves of natural gas and crude, because of which Russia provides almost 40% of the energy needs of the Europe. The supply is met through the Russian natural gas, and we discussed about the Nord Stream gas pipeline, which would pump this gas from the Russia all the way to Germany, which would further connect to the European Union. Now, because of the political pressure, few of the major British companies which were holding stake in the Russian oil markets, they are trying to exit Russia, and this would have an impact on the global economy. Let's see that. The British company Shell recently it said that it would exit Russia temporarily, and these companies like Shell and the British Petroleum BP, they had joint ventures with the Russian companies, and they were producing oil, because oil is a very profitable business. These companies had invested in Russia. And why are these companies quitting Russia? Because of the Russian and Ukraine conflict, various European nations and the US have imposed economic sanctions against Russia, and the Russian banks have also been cut from the Swift messaging platform. And US also said that it would freeze all the Russian central banks dollar assets that are there in the USA. With this background, the political pressure from the native governments of those countries, for example, on the British Petroleum, the UK government was putting political pressure to exit from Russia, because of which those countries announced their exit. And oil is very important even for Russia, because the oil revenue makes up 1/3 of the Russian government budget. So you can imagine how much impact the oil revenues has for Russia. And various companies like Rosneft, Gazprom, they were also held by the government, and the government indirectly controls these companies, which are major oil producers within Russia, and the revenues would be shared by these companies with the government. So the Russian government has direct stake in the oil production and natural gas production in the Russia and their dealings with the European Union. And any impact on these companies would directly affect the finances of the Russian government. And now currently at this stage, when there is conflict going on, doing business with Russia poses a significant reputational risk for these large companies. Even earlier it had a risk of the reputation, but the profits that they were getting from the Russian government from the oil business, that was far more than the reputational risk that they had. So they were going for it. Now currently, because of the political pressure, they exited. And what will be the impact of this exit? In the short term there may not be much impact, but in the long term there will be impact on the Russian economy. For the Russian economy, these foreign companies, they get the technology, technical know-how, research and development facilities. They help the Russian government in energy exploration and production, and they also get the capital, the finance needed for investments. All this would get affected in the long term. And even various commodity trading houses which are dealing with Russian oil in the international market, they are also going to stop dealing with it. And this can affect the liquidity in the oil prices, which would lead to volatility in the energy market. Because the global supply of oil to the global market reduces, it would lead to a general price rise in the overall world. So the impact would be borne by almost all of the world, because the supply of oil and natural gas itself is reducing. And we know that when the supply reduces, the prices will increase. And what is the impact on the European economy? Even the Europe can't afford to have sanctions on Russia for long term, because as we have discussed, 40% of the natural gas needs of the Europe is met by Russia. When you are in such a situations, having sanctions on Russia and not importing oil and natural gas from Russia would affect the Europe itself, because already there is a reduction in oil supply, the prices are increasing, and if they further stop importing from Russia, the domestic prices in the Europe would increase, and the citizens of Europe would have to pay more for this higher natural gas prices. So there would be internal conflict and pressure from the citizens within Europe. So we'll have to wait and see what the European government does. Those are the articles related to economy today. Thank you so much.